Good morning, everyone. Today, we would like to present our financial analysis project on SORKON Food Public Company Limited, a well-known food manufacturer in Thailand. I will begin with a brief introduction about the company before we move on to the financial ratio. SORKON was founded in 1984 by Mr. Jaren Rutira-SORKON, who has more than 10 years of experience in the food industry. He started business with an initial investment of only 300,000 baht. The company began with a simple idea, and he noticed that consumers in Bangkok prefer products like cheddar pork sheet, and Chinese sauces. So he sourced this product from Khon and sold them in the city. Because of this demand, the business slowly expanded. Later on, to improve production control and distribution efficiency, he established a dedicated manufacturing facility, and the factory was equipped with modern technology, which helped the company produce high-quality products that meet international standards while still keeping their traditional and signature flavors. In this slide, we focus on analyzing the company's performance over the past 4 years by using key financial ratios. This includes liquidity ratio, efficiency ratio, and profitability ratio. And we calculated the current ratio, debt to equity ratio, assets turnover, return on asset, net profit margin, and return on equity. And our goal is to understand the company's financial health has changed from 2021 to 2024, and what this number can tell us about the company's strengths, weakness, and overall performance. Let's move on to the next part.
This part is comparison and analysis of the financial performance in 3 main areas. The first one is profitability. In 2024, the company recovered very well. Profitability increased significantly because the company managed cost better, and the net profit margin rose from 1.61% to 3.43%, which helped the return on equity jump to over 10%. And the next one is debt levels. The company has a strong and stable financial structure. The current ratio is around 1.76, and the debt to equity ratio is only 1.37. This means the company has a good liquidity and does not rely too much on debt, leading to low financial risk. And the last one is resource efficiency. Assets turnover slightly decreased from 1.14 to 1.04. This is slightly because the company invests in new assets such as facility or machinery, which have not yet generated full revenue. For the summary, the company is improving its profitability, keeping its debt level safe, and investing for the future growth.
To continuing from my teammates, I will present the recommendation for SORKON in 2025. First, we recommend focusing on cost reduction. The company should maintain the strict control policy that already helped improve the net profit margin in 2024. In addition, improving cost of goods sold efficiency will help push the margin closer to the stronger 2021 level of around 5%, and this will stabilize profitability while keeping expense under the control. Second, we suggest market expansion because the company currently has low leverage and stronger profitability. It now has the capacity to expand both domestically and internationally. By investing in new projects or strengthening distribution channels, the company can increase revenue and also improve the asset turnover ratio, which has been declining in recent years. And finally, we address the company weakness through the weakness fixing strategy. The main issue is declining asset utilization. To solve this, the company should optimize inventory management and increase the usage of existing plants and equipment. And this allows the company to generate higher returns without requiring major new investment. To conclude, these 3 strategies like cost reduction, market expansion, and improving asset productivity will help the SORKON strengthen its financial performance and support sustainable growth in 2025.
For part 2, the capital budgeting. Weighted average cost of capital represents our company hurdle rate, the minimum return required to satisfy our investor and creditors. Our WACC is the sum of two weighted costs, is the after-tax cost of debt and the cost of equity. Let's review the four inputs. The costs are after-tax cost of debt is around 1.61% and cost of common stock is 10.04%, approximated by ROE. The capital structure, which are proportion of debt at 57.79% and proportion of common stock is 42.21%. Substituting these figures, the calculation is WACC 0.016 multiplied by 0.5779 plus 0.1004 multiplied by $0.4221. For the result in total is 0.0516. So for the SORKON WACC in 2024, it's 5.17%. Any new investment project must generate the return exceeding this 5.17 rate to be pursued. Thank you.
So for this slide shows the NPV calculation for our project. In year 0, we have an initial investment of 55.50 million baht, which is shown as negative cash flow. From year 1 to year 6, the project generates positive cash flows. Each cash flow is multiplied by the discount factor to find the present value for that year. After discounting all the cash flows, the total present value amounts to 59.86 million baht. Finally, we subtract the initial investment from the total present value and we get an NPV of 4.36 million baht. Since the NPV is positive, it indicates that the project will create value and should be accepted. Thank you for your attention.